market update here on the Investing Cube page and also on the ATFX YouTube channel. My name is Alejandro Zambrano, and I'm the Global Chief Market Strategist with ATFX. I'm also the Chief and Editor-in-Chief here at InvestingCube.com, which is a website I created to provide you guys with updates on the markets, and hopefully you enjoy it. We have some very good writers here producing updates and providing some technical analysis on the markets. Okay, so it's all about the coronavirus. It continues, and the situation hasn't really slowed down. I mean, stock markets are down quite a lot already. Yesterday, the Dow Jones was pretty much around these levels here, and it looked like we were going to stabilize. You can see here, look, we went up, stabilized, and at one point it looked like we were going to have a nice ending for a while, but instead here at 8 p.m. London time, after the pretty much around the close, the market slid and traded even lower. So we're talking about quite some dramatic declines here, and the main reason for this is the coronavirus. We did also have some durable goods orders out, and it wasn't really perfect, but it wasn't really bad either. So and the Italians updated that they had 650 cases yesterday night, and that's an increase of from about 474, and that's an increase of 37%, which is a significant amount. And when we had the growth rate in China, it was also something similar. It was actually a bit lower. I think at the end we ended up about a 35% growth or so in China until things slowed down. We'll see, we'll see how it happens here. Like if the rest of Italy decides to shut down, then I think that would definitely stop things. But the way things are looking right now, people are not shutting down. Obviously, they have shut down in the north. But in the rest of Europe, France, and places like that, it's like business as usual. Just on my way here to the office, for example, I passed by like 20, 30 French students. We also have, we're here visiting. We also have, I think, some 10 different schools that earlier in the week had some concerns because they just been to northern Italy. So there's a lot of travel back and forward here. Sorry. And that is, people are not taking this necessary steps. So I think that's really what market is worried about. Just give me 1 second here. Don't worry about me yet. I had just had something in my throat. So things are not looking that good. And what people are worried about is effectively just the shutdown. What if we have the same situation as we had in China, where effectively for a month and a bit more, there's really no work? What would happen with small businesses? Would it go bust or not? So that is what people are worried about. And the way this looks like, as I just said, is probably going to continue to spread to the rest of the countries. And the market is sliding on the back of that. So as we're already talking about stocks, let's talk more about stocks. Let's continue. So this is actually the S&P 500, which we usually cover in this market update. So yesterday we said the trend is bearish, and looking at this today, the trend continues to be bearish. I highlighted this level. We said first this is bearish, and then we moved it down here. Now we're moving it down here. And when these situations like these happens, it's important to pay attention to the short-term trend if you're trading with leverage and the CFDs. If you're more of a long-term trader, well, there are some stocks now that you probably would have liked to have bought just 2 or 3 weeks ago that you said, why did I not buy them when they were at low levels? Such a good company. If you're that kind of person, like a stock trader, happy to hold positions for a few months, then you probably be buying now because these are not bad levels. And even if you're a CFD trader like myself, and you wanna, and if you have a very wide stop loss, this is still an attractive level to work with. And there are many reasons for this. And the reason is that eventually, maybe people don't want to buy Apple shares or Apple phones today. Maybe don't want to buy cars today, especially not if the whole thing shuts down or Europe and then most likely the US. But 1 year from now, 2 years from now, things are definitely going to be back to roll, most likely. Death rates are not encouraging, but the death rates are not influencing or not infecting younger people. If you're like older than 80 or from 80 and higher, there's a 14% likelihood that you're gonna die from this disease. But if they know, as some numbers are saying now, so far almost no one, if any, younger than 9 years has died. And it's first when you start to hit 40 and a little bit higher that the percentages go a bit higher. But it's at around 80. From 70 to 80, there's a 10% likelihood, and then from 80 and higher, you are 14. And I think if you're a man, even worse. So, long story short, the world's going to be around probably by this time next year as well. And those people are probably buying shares right now. And it is also possible to buy indices on the back of that. And if you look at this, this is just a drawdown. Drawdown just shows you the decline from the high, from the all-time high. So if we go back, you can see here that the typical decline in something like the S&P 500, actually the typical decline is about 4% from 2018-12. But then if you sort of include most, like a bit more of the severest ones, you're looking at 6%. And I think that's pretty much where the 200-day moving average was. So if you did try to buy the 200-day on average, it makes perfect sense. Now, if you look beyond there, you have some more stronger declines. This one is 2016, and that's where we are right now. So in the last, well, pretty much since 2012, you only had two other occasions where the market declined as much. It was here, and then you had this slide here in last year, right? And even here, we're looking like that. And the way the numbers look like this, some guys did some statistics on this analysis. So when we enter more than -10, a correction, the market will recuperate the losses within 4 months. So within 4 months, the market will recuperate the losses. However, if we slide below 20%, it will take 2 years. So we're in that sweet spot here where, at least from a risk-reward ratio perspective, it makes sense to have a bullish view as long as you don't trade below 20%. If you trade below 20%, you could potentially be holdings for longer. And again, if you look back at some more extreme levels, like in 2008 and 2009, at that point the market did slide with 57%, and that's why people that are buying now, they're buying Coca-Cola, they're buying Facebook and companies where they think they're gonna be around for a long time. They're not necessarily buying some prospecting firm that might have found gold or might have found crude oil or a medicine company, pharmaceutical that might develop something. Rather is big companies like AstraZeneca, again, big car makers, where people think there is a future there in the next few years. And if you trade them on with low leverage, if you're trading with CFDs or cash, you can actually hold these ones for that period. So there's very interesting times now from that perspective. Now the problem is here, what's going to happen with the situation here in Italy? The way this is looking, it's not slowing down. And as I just mentioned before, just looking at reports, there's not this business as usual, and that is a bit worrying. So I'm not sure exactly what's going to happen, but again, long-term traders are probably looking at this with interest. Now, if you're just focusing on the short term here, then focus on 3110. If you're focusing on 3110, then below that level the market is bearish, and we can easily swing up to something like these levels here at 3040 or 3040, and then maybe from these levels the market will attack the downside again, something like that. Now if you want to play the contrarian view and you're happy to take on risks, now these people are saying like this: okay, we're down 14% now. What if we have one of those extreme situations where we decline with 20? Well, let's figure that out. Where's 20? 20 is around here. So below that May, 31st of May low, around that level. So some of these people, probably if they're probably buying here, and again, stop loss orders are probably some downward or down here, and they're probably going to manage the position throughout this little period here. So that's what I can say about that. In regards to the DAX, is also bearish. It just took out, or did try to trade below 11,825. And let me see if I can get this thing to load. On a drawdown basis, we're down here with 14.4%. In the past, for this market, it's not, you can see it's actually quite normal for this market to trade, give up some 32% here, and here you have 28.8, and here you have 24. Now we can use information about the other markets to get a rough idea of what may happen. And again, I think the decline on the other side on the Atlantic is a bit limited, so maybe we'll see a little bit of support here. But this is a bit more dangerous than buying, I think, something like the S&P 500. Now, if you flip it to the 30-minute, you can see that this is the big level here. And the market might go up to something like 12,261, but then people are going to sell. You might say, well, look, we have these shallow corrections. Yeah, okay, we might. I mean, we only had shallow corrections, and I agree. But, yeah, it doesn't make sense to trade on these unless you really know what you're doing. I don't, so that's why I look at the big stuff. If we continue here, what can we trade, and what have we talked about here before, which makes perfect sense to trade in the current environment? Well, this is something that we talked about, and it's crude oil. We talked about the big rectangle, the price trading sideways between 50.81 and 63.79, where I said on the first leg of the virus, I said we can probably buy here for this to go up. It did go up quite nicely. It went up with about 7%, and then the market moved back down again. And I said that on a break to that level, we would confirm the breakout of that rectangle, and that rectangle has a target of 737.29, and this has worked out as a charm. There are other setups as well that I haven't shared with you guys, like New Zealand dollar yen, which made perfect sense, because what I tried to do is I tried to marry this situation with the charts. So in the case of coronavirus, buying gold, buying yen made a lot of sense, but not necessarily something like dollar yen, but New Zealand dollar yen, pound yen, being bearish those. Aussie dollar sales, which we talked about here for a long time. I also been talking about selling a lot of dollars, Aussie dollars and New Zealand dollar on places like CNBC, and that makes perfect sense because the proximity they have to China. And here, the market is just sliding, so you just need to enjoy the ride. And if I take fib from the very high to the very low, we still have these levels here. So if one is not already engaged in this, unfortunately, you need to wait for that move to the upside. You can, of course, you can always go to the 30-minute and find setups there, but it's very, very risky. And this is gold, and gold hasn't acted in its normal self. The very last setup I shared with you guys was to buy here for it to go upwards. That went perfectly. That was like a hole in one. But here, the idea was to buy at this level from 1630, and the market's going down and down, and people are not necessarily buying here, which I find a bit interesting, because at times like this one, when the markets are going down, surely you will be buying some gold as well, but the market is not. Maybe people are coming to the realization that in a genuine pandemic and chaos, it's going to be very difficult to grab a piece of gold and say, hey, can I buy bread with my gold? It does suggest to me that holding dollars is maybe what people prefer, and that I think makes more sense, holding dollars than gold. In the case if the system really collapses, you're not gonna know where gold is, what the value is. I'm not saying you should go and sell your gold. It's probably good to have some gold, but at least I don't know really how to explain this, other than that the demand for dollars is higher than the demand for gold right now, which is clearly it is. Now, what can we do here? Well, technically, there's nothing to do here. We're still above the trend defining level, which is 1597, and here, sooner or later, I suspect this is going to bottom out and then shoot to the upside. Now, let's take a look at something like different. Now, this is your euro, and the euro is going upwards. And the reason for the euro going upwards is because the funding currency situation we talked about. So we talked about this 2 days ago. We can do it again for people that wasn't here. So it's just, I think, it's because the euro is a safe haven currency. That might sound weird. Well, it's probably because of this. It's not just a safe haven per se. It's because of this. It's not exactly, this is different LIBORs, different periods. But let me see if I can find it. Okay, let's do it like this. Where can we find it? LIBOR and okay, this is much better. These are the central bank rates across the world right now. European, 0 apparently, but it's slightly negative. This hasn't been updated, but we all know that it's negative, right? Okay, this is so obsolete, these lists. Long story short, interest rates in the euro. Let us do it like this. ECB central bank rate, minus 0.5%. Fed central bank rate, 1.75. So if you if in the case of here the interest rate is quite high here, you can actually see, okay, so you can see more here. Okay, all right, is this, they take us back to the same rate like we were before. Long story short, interest rates are negative in the euro area. So what people do, they borrow in euros and then they invest this elsewhere. And I think what's happening here is that people that have borrowed in euros are now trying to hedge their positions, and that's why the euro is going up. They're hedging that. It's not because, you know, people necessarily like the euro more than the dollar. It's more, I think, that they have high exposure towards the euro in form of loans, and that is what we're going upwards. Because otherwise, if you think about it, the crisis is in the euro area now, so you would probably be selling euros instead of buying it. Now here the market traded above the high and it's going upwards, and if you look at it from a 6-hour perspective, you know, we can go a little bit higher as well, but I think in the long run this will prevail, and I'm going to show you something different. So this chart, I haven't touched this chart since I created it in, I think it was August of last year. This is the same chart I used for the Q1 outlook and the Q4 outlook. And what I said in the past, that people were going to sell up here, and as long as you're below that August low, this will be a downtrend. The market moved down, and in fact we touched the target for my, I say end of Q1, but we touched the target that I wrote in December. We touched that one in 20th of February. Now this pitchfork remains in play, and we're going upwards now, going to maybe 110.98. Might go a little bit higher, but we shouldn't really trade much higher than this level. And I reckon as long as you trade below this level here, which is the January 16 high, this is probably going to go lower eventually, but we need to probably go up here, and we're probably going to spend some time here. If we look at it from a very, very short-term perspective, if you look at the 30-minute, you do have a bit of a bullish uptrend. You know, you got support here at 0962. So we might go down a bit and then probably go upwards. This one is more straightforward, but it's also much more difficult to trade. It's the GBP versus the USD. And a few days ago, I said people are probably going to sell here, and that little spot is the 29.59 level. I continue to be bearish, and I think from this level people are going to sell. But if I get rid of everything, it's quite clear to see that we are trading just above 3 support levels, and things are just getting cramped. So it's a difficult one, and I'm not focusing on that myself. Finally, here's the the Japanese yen. And here the Japanese yen, the trend was bullish above 109.58. But as I mentioned yesterday, it didn't make sense with the current macroeconomic theme. And what I said is that if you see a drop rate and the coronavirus increases, and more importantly, if you think we're going to see a drop in coronavirus increases, then you will be looking to buy here. But I said at the end that I didn't trust the slow, and the market did indeed slide. We're now just above 108.25, and this might be the level where the market tries to bottom out. But again, let's give this a bit of time. Unless you're super confident, I'm saying exactly what I said yesterday. Unless you're super confident that things are going to slow down in Italy and the rest of the world, then one should wait. Because what could happen is that come Monday, you have more and more cases. And if we don't get any input from the central bankers, then this could potentially, gap a bit lower. And if we take this out, we could potentially go down to 106.50 and maybe 105 eventually, because the yen tends to get a lot of support in this situation. Again, has to do with those low interest rates. Okay, so we covered a lot of ground, and hopefully that will help you a bit. Now let's see if you guys have any questions. Okay, it looks like I put the wrong. There we go. Good morning, Maurizio. I hope you're doing well. Maybe, Maurizio, you can tell us, if you're still on the line here, if you can tell us, like in the southern part of Italy and in Rome, are people still sort of managing their business as usual, or are they sort of, not going out unless necessary? If you have an input of that, it would be good. If you're still watching, I'm asking Maurizio because Maurizio is from Italy. We got Julie here saying good afternoon, and Kenya, good afternoon to you, and thank you so much for joining us. We have Nikos as well from Greece. I hope you're doing well. And we have Hi as well. What do I think about the dollar Turkish lira? Okay, let's check out the dollar Turkish lira. There was some news about the dollar Turkish lira, or not the dollar Turkish lira, but there was news that I think was 33 soldiers, Turkish soldiers, that were killed by Syrian forces. And I think, and then there was some comment that I think some Turkish military commanders said, said that they were going to allow refugees to access Europe again. They wouldn't stop them. Now this is going up, and it's going up just, it's up with 97 basis points now. Sorry, 74. But I can also look at this, which is the dollar South African rand. So you get dollar South African rand up a bit more than dollar Turkish lira. And I think what's happening here is just that emerging market currencies are under pressure. Now, the market just took out that high. When you took out a major high like this one, you usually go to the next high. So you'll go here maybe. Then you have this level here and this level here. Let's also just take a look. Are we looking at any sort of pattern? I think we might be looking at a... Oh, what can this be? I'm not sure if this is... yeah, it could be a triangle. We're just going to get a very aggressive target now. I'm going to take it in the middle there. You have that as well. Now, do we have anything here that we can use? Let's clean this up. I don't know what we know. Always when you need to spend too much time figuring out what you're looking at, then there's probably nothing there. Okay, so let's stick with the basics. And the basics of this: you take out a major high, you go to the next high, then next, the next high. So we're dealing with a trend. Next thing here is to figure out What's the trend defining level? Let's actually, I'm going to load a different price here because this one is not good. Okay, so you have some support here at 603 and rally strongly. Actually, can't even, this is where this is on the 24th. Actually, we can tighten this up more like that. And then we can take fib from the very low to the very high, and you get these levels. So then your first fib, and then you have this, which was resistance turned support. That's what I will be looking at. You might even be able to tie this up to 610 as well. And then you look at the big picture, and then you maybe will target something like that and like that. So maybe this will continue to spiral like this. And again, one could potentially be buying dips 630, 635, 640. That's what I will be looking at. Okay. Mauricio says that the situation here in Italy is a bit confused. I'll write a bit later for you. Okay, good. Thank you so much for that. Okay, guys, we're gonna wrap things up. Okay, so here says that his own view. Oh, Mauricio says that it seems to be more optimistic than last week, so people are less panic than last weekend. Okay, that's good. I think as long as they can keep things contained, then that would be good. I'm gonna check this out. Yeah, so this is apparently a live webcam in Rome. Seems to have a nice weather today. This is interesting. So obviously there's a lot of people are still on the streets. It's the same in Europe, and London, by the way, it's even more packed. This is interesting. Nearby webcams. So I don't know if these are live. They should be live. But we need to pay attention and see how things spread. At least percentage-wise right now, the numbers don't appear to be slowing. And I have a colleague of mine, he's Italian, and he's telling me that you have people that were in these trapped areas, and they don't want to be in a situation like it was in China, where they would lock down everything, and effectively when you lock down, you can't do nothing. And so some of them had actually left the area and went down south, and that is what's worrying, especially with these sort of crowds. So hopefully things are going to be good, but again, as I said before, it doesn't seem that there's any panic on these streets. All right, guys, we're going to wrap things up. Be careful out there, and be careful when you're trading. And any point, if you feel, oh wow, this is too crazy, then it's always better just to wait. This is gonna calm down. I can assure you of that. It will come down at one point. It did calm down in Shanghai and the Shanghai stock index. So I'm sure it's gonna do this again. And if we're wrong, then that's why you have a stop loss order. Okay. Okay, guys, have a great day, and I'll see you guys on Monday. Thank you.